they don't know about that opportunity to invest in real estate. They are missing out on a great way to diversify. Even if they're going to stay in the stock market, they can at least spread their risk out by getting some into the real estate arena and also capitalize on the tax benefits that come from real estate.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted Patel.
Hey everyone, this is Ted Patel, and welcome to this week's edition of Decoding Cashflow Podcast. I'm here with Eric Lindsey from Moonlight Financial Security. Eric has operated a successful real estate wholesaling business and have invested in mobile home parks. He's currently focused on syndication of commercial properties, including multifamily apartments, and aspires to educate others about its benefit. Eric is also a host of Moonlight Real Estate Side Hustle and Syndication Show. Eric, welcome to Decoding Cashflow, and I hope I covered your background in summary, but we'll go deep into it the later part of the podcast.
Yeah, Ted. Hey, thanks for having me on, and I think you actually oversold me. But I'm definitely looking forward to the show and seeing if I could provide some value.
Awesome, man. It will be a great show, I'm sure. And so, Eric, before we dive deep into any aspect of the real estate investment or syndication, right? Can you please give our listeners a little bit background about yourself? How did you get started into real estate? And what's your current focus as of now?
Yeah, it'd definitely be my pleasure. So my journey into real estate, it started maybe about 8 years ago. And so by trade, I'm a union carpenter. And so I'm still a union carpenter to this very day. I've been in the construction space for right at about 17 years. And I hit a point in time to where I started getting into some layoffs. And so within the construction arena, that's pretty regular for construction guys, but I wasn't aware of that piece. And, that just kind of drove the point home that I really needed to go after financial security rather than job security. And so about 8 years ago, that sent me down a rabbit hole of looking into a way to secure my family's financial future and to provide them with some financial stability. And so I went and started doing some research. I looked at starting a business. I looked at investments, stock markets, real estate. And so I finally, after starting some businesses and realized that wasn't really the place that I really wanted to establish a foundation at, I decided that I was going to go all into real estate. And so I went down the binge of Bigger Pockets and soon realized that I need to niche down somewhere. And so I didn't have a ton of capital at that point in time. And so wholesaling, it was a low barrier of entry. And I went off to the races. And so I had some really good success early on, and I ended up getting into a really good transaction. So there was a syndicator that operated a podcast just like yours, just like mine, and he was offering to individuals to bring him a deal, and if a person was able to bring him a deal that he was able to close on, that he would pay them out a referral fee. Mm-hmm. I didn't really know if that was a real thing or not. But I was pretty motivated, and I'm a self-starter. So I went out and I took him at his word, and I started sourcing deals. I just went into a Google search of mobile home parks. Long story short, I was able to get connected with a seller of a mobile home park. He had 600 units, and it was located up in Iowa. And I was able to put the podcast syndicator together with the seller, and he was able to purchase the mobile home park. I think the purchase was somewhere around 25 million bucks. And so he wired me sent me a wire for 125 grand. I think I may have put about 5 hours of work in to make 125,000 bucks. So I was 100% sold But I should have stayed in that space and became a buy and hold investor. But I put all my time into studying wholesaling. So I was off to the races with a wholesaling company and start doing some really good volume. And so that kind of has led me to the place where I am now. We did some really good volume for quite some time. And I also realized that while I was doing those deals, I wasn't creating equity for myself and I wasn't creating passive income. And so I began to look into the buy and hold piece and end up buying a total of 3 mobile home parks. And as of right now, we own 2 of them still. And my current focus is 100% multifamily apartments. If there's a mobile home park that crosses my desk, I kick the tires on it and take it down in a heartbeat. But as of right now, I am focused on multifamily apartments.
Awesome, man. And that was a lucrative wholesale deal that you just mentioned, right? 120 grand just from one deal. But people don't understand how much effort it goes into it. You mentioned 5 hours, but the time it took for you to learn that,
Yes.
how to underwrite, how to find the brokers, how to find the sellers, that's the background, or the work that you do in the background. And the 5 hours is just once you get the deal, you evaluate it and see, oh, look, number looks good, pass it on to your partners, But before that, there's a lot of work that goes in the background.
Right. No, I agree with you. There's a ton of training and you're going to have to put a lot of effort into learning the process and honing your craft with conversations with sellers and so on, so on. So it is a lot of effort and a lot of work that led up to that.
Absolutely. So as you mentioned, right now you own 2 mobile home parks. You sold one. Can we tell us about one of the mobile home park deal from start to end, like from acquisition to selling that deal? How did it work out, and how did you source the deal also?
Yeah, so one that I went full cycle on was my first deal. It was a really small transaction. So it was a 25 space mobile home park located right on the border of Iowa and Minnesota. And this particular deal, I stumbled into it. I was cold calling and I happened to catch a older lady on a really good day, and she had been going through a lot of tragedy in her life. She had lost her husband. I think she had lost her son as well. And so she offered to carry the note on the park for me. And so she charged me a really low purchase price. It was, I think she charged me $180,000 for a 25 space mobile home park. And it was a home run. And so I ended up having to put $30,000 cash down of my personal cash, and she carried the rest of the note. And the park was in really good condition. It was a decent park, and it was direct build. It was 100% tenant owned homes. I went in and made a few improvements, and bumped the lot rent up. Yeah, and I was able to create a really good return for myself, and so the NOI it increased significantly, and so I just held that park for 13 months, and then I turned around and exited that, and so I went full cycle on that one personally. So more of a syndication that I've been a part of was my most recent deal. And that was a 78 unit mobile home park, and that's located within Tennessee. And so it was a similar scenario. And so I had reached out cold call. That's kind of my bread and butter, since I have that wholesaling background. I try to get direct to owner. I build relationships with brokers as well, but I don't want to neglect the skills that I've accrued over the years from wholesaling. So I try to get direct to seller a lot still to this very day. And so this particular transaction occurred because I called 81-year-old gentleman. He was looking to exit. He was looking to sell his portfolio, and he had a 78 unit mobile home park that he wanted to sell. So he wanted to meet up with me. It was kind of a unique transaction. And so this particular transaction is, he wanted to meet me face to face. And so I'm located in Kansas City, and this park was located in Tennessee. He didn't feel comfortable doing business from such a far distance.
Yeah.
So I knew that in order to take this deal down, I was gonna have to actually get face to face with this gentleman. And so, and I wasn't 100% sure how long it would be on the market if I just let it sit. And so I was able to catch a plane at the last moment, and I was down and meeting him within 2 to 3 days. And so after I got in person, and met him face to face, we were able to meet one another. He showed me the park. I put the park under contract, and I got a really good deal on it. And so we ended up paying $2,250,000 for it. Day one, after the appraise, it was worth $2,800,000 without us putting anything into the property. And so it was a really good deal. And so we was able to raise about $900,000 to close the deal. That was down payment and also CapEx that we was gonna use to bump the rents and justify the rent increases that we were going to do. And so everything has pretty much went off without a hitch. It's been a great performing park. The city owns the street that runs through the park. When they seen us come in and begin to turn the park around and make improvements, they got so excited that they repaved the road for us for free. And so the tenants, they're so excited to be now living in a park in which the owner is actually doing some things, because the 81-year-old owner, he was pretty much operating it turnkey. He was only wanting to be involved with the park to collect the passive income monthly, and he wasn't infusing any capital into the park to improve it. And so when the tenants seen us come in and install mailboxes, trimming the trees, operating a cleaning policy for everyone within the park to make sure that they're keeping their community and their land that they were renting from us, when they seen us making those changes and implementing those changes, they got really excited. And the rent increases we didn't have much pushback. And so everything has been really and has gone really well with the purchase and the operations of this park.
That's awesome, man. And I would like to know more about, your direct marketing technique. As you said, the deals that you got under the belt, right? You contacted the sellers directly. What are the things that you can do to get in touch with these sellers directly? If you can give some of the pointers to our listeners.
Yeah, so one of the things that I love to do is reach out to the county. So when I was wholesaling real estate, single family real estate, I would reach out to the county and get code violations list. That was my bread and butter. And so what a code violation list is those are reports that the city or the county are receiving about issues pertaining to a property, and they would notate it. They would send them violations, the property owner violations, or they would get in contact with them and say that they need to make this improvement to get out of violation. And so these were all public records, and it's a public record that you can fill out and just reach out to your county and ask for these records, and they'll give you the property number. They'll give you the owner's first and last name. If it's an LLC, you got to do a little bit more work on that. You will have to go back and look to see who the actual owner of the LLC is, and that can be accomplished by tracking down a few things and having virtual assistants that's all they do is locate owners of these LLCs. And once you get the owner's first and last name, their personal mail address, then you can skip trace it and get their telephone number, give them a call, and discover if they're interested in selling. So that all can be done within the multifamily and the commercial space as well, to see if there's individuals that want to sell. And so a lot of times that's going to give you a better opportunity to get a good deal because you're not involving a broker. You and the seller can work together, and you're not needing to have a broker that's going to charge 2%. That could go towards you, or that could go towards the seller. And that's going to make the properties, the metrics and the numbers work better for the investors and for yourself as an investor.
And it works out, as you said, right, for both the buyer and the seller, because the seller doesn't have to pay the realty fee of maybe, depends, right, 2, 3, 4%, 5%, whatever it is. And on the other hand, buyer has less competition. When you go directly to the seller, it just eliminates the competition from the others. So you can purchase at the maybe below market rate, but as long as, buyer, seller agrees to the terms, it goes
Exactly.
both of us favors. Yeah.
Mm-hmm.
All right. Normally, I also try to buy most of the things off market. I try not to buy anything at market value.
Yeah.
Especially
It's
for
a
my
challenge.
construction business. Yeah.
Yeah, well, no, that's smart. I think that's a great strategy to try to get off market, but it is a huge challenge. You've been in the business for quite some time, though, and those are usually the guys that are getting those off market pocket listings from the brokers. And so for a lot of us newer operators, we're having to build those relationships, in which you've already established and took you quite some time to establish. But in the meantime, we can cut through the broker by getting direct to the seller.
Yeah, absolutely. All right. So Eric, I know you also are a host of the Moonlight Real Estate Side Hustle. So wanted to talk to something about the side hustle. Like there are many listeners or, the investors who already have 9 to 5. They wanted to get into the real estate business. They have little time, because they're so busy during the weekdays, during the weekends. They have their family. They got something that they need to take care of, for the home or family. What is the advice that you'll give to them, to start their own side hustle, time-wise, managing, their time, as well as focusing on any particular niche?
So since I've been operating a podcast, it solely focuses on how to operate your real estate business as a side hustle or as a side business. And what I'm consistently hearing from most of the individuals that comes on the show is they're doing this on the side, they're managing all of life, they're still being successful. And so there's passive individuals that's doing that, investing passively, and there's individuals that are actively doing it. And so they are simply managing their time. Something that I discovered also is most of the successful individuals that have been able to go full-time into the business, they once was operating their real estate business on the side of their business or on the side of their W-2. And so me personally, I have W-2, and I've been able to do significant things while having W-2 income. And it's all because of balance. You have to see what works for you, and everyone's situation is a little bit unique, and you just have to evaluate where you are in the process. Are you looking to go fast? Are you looking to exit your job? What is your end goal? And so you start with at the end and you work backwards. And so based off of that is how you're going to structure your time. And so I'm super passionate about that. And that's why I've built a whole podcast that shows and gives individuals examples of people that have done this successfully, have accomplished great things while maintaining W-2. And so one thing I can say is that there is hope. There is a way to be able to accomplish this, because countless and most individuals that are within the real estate space, they've all done it before. And so it comes down to time management, and it comes down to what your end goal is in the end.
Yeah. And most importantly, right, as you mentioned, nothing wrong with the W-2. People are happy doing their W-2 and they love their job, whatever they're doing. But
Hmm.
the aspect that everyone needs to focus on is get the passive income on the side. Even if you're doing a
Yes.
W-2, you're going to retire at one point of time, and you can't
Hmm.
rely solely on your 401k or stock market investments. Real estate, as you me know, right? It's a steady income.
Yes.
Once the rent starts getting, it's not going to go low. It's always going to increase as time goes by. That's a passive income for everyone. It helps them a lot during the retirement period. Also to build
Yeah.
the wealth, pass it on to their generation.
That's true. Well, and something else that I've discovered since I've been operating a podcast and interviewing countless individuals on there is just as you said, not everyone is interested in leaving their W-2 income. There's
Yeah.
people that are excited about what it is that they are doing. They just want to earn passive income on the side of it, or they
Yeah.
want to create generational wealth on the side of their job, and they have absolutely no plans on quitting what it is that they do. And so everyone's situation is a little
Yeah.
bit different. And that's why I love to interview so many people so that I can hear different perspectives and just gather information on how I can do and what kind of options are out there.
Yeah, absolutely love it, man. The other thing I wanted to talk to you about is your syndication approach, right? You have been uh, working on syndicating commercial real estate, as you said, right, for mobile home parks, multifamilies. Just if you can give our listeners a little bit background, or not a background, I would say, a little insight about how you attract the investors. Like, what's your main funnel? How do you get in touch with the investors? How do you keep the investors happy? What's your regular communication period with them? If you can give us a little background on that, please.
So my main strategy as of right now is through podcasts, and that's through education. And so that's what I'm discovering is the most value that I can supply. And I think at us as operators, I think that's the greatest way that we can serve our investors or passive investors, and also other GPs that's looking to get into the business, or established GPs as well, because
Yeah.
we sharpen each other as we hold communication, just as we are talking now and just as we were talking before the show. We're learning, continually learning from one another. And as we host podcasts, as we hold these interviews, people are able to learn so much and just hear what another person has done, and we can add that to our toolbox at that point, so that we're more prepared. And so I think also another great strategy for passive investors and connecting with passive investors is LinkedIn. I think
Mhm.
that is a gold mine for individuals that's looking to network, because they're professionals. They're
Yeah.
individuals that are established and they're looking to learn, or they're looking to invest in. And sometimes they're looking for alternative investments, because the W-2, they promote the stock market and they're not really sharing the information about real estate investing, in which has performed so well. And it's great injustice on investments. And so there's people on LinkedIn that need to hear the great opportunities that have come about. And so we just have come out of a bull market. When this Within this last cycle, it was a bull market. So much money was made, and so many individuals that were only focused on the stock market, they missed out on that great run. And so if
Yeah.
they don't know about that opportunity to invest in real estate, they are missing out on a great way to diversify. Even if they're going to stay in the stock market, they can at least spread their risk out by getting some into the real estate arena, and also capitalize on the tax benefits that come from real estate. So LinkedIn is a great source and a great way to connect with passive investors.
Yeah, that's my preferred site also, to network and connect and share the stories, everything. So for the communication, do you do like bi-weekly, monthly communication with the investors on, cash flows or what's taking place at the property, what has been spent? What's your strategy on that?
So our strategy is we reach out monthly, and so we've got an asset manager within our team. We have a structure set up, and so there's a team that is built around locating the deals, capital raisers, asset management people that are within the day-to-day operations. And so our asset manager, they're more or less responsible for maintaining the relationships with our capital partners, and this communication is ongoing. And so we reach out to these individuals, our passive investors, on a month-to-month basis via email, via newsletter. And so that's the strategy as of right now, just to make sure that they're aware of exactly how everything is performing, because with the high interest rates that's taken place and that has taken place, there's some
Yeah,
different things
little concerns going on, right? We
exactly. And so
understand that.
you always want to be in communication with your investors. That way they can know exactly what's taking place within the market. And one good thing that I can report as far as our investment, our most recent investment, is it's still performing. Is we haven't missed any distributions. And so that's the benefit, and that's the beauty of mobile home parks, because you can get things at a really good deal and at a really good price point, and that helps things perform well as far as your numbers and your metrics.
Love it, man. Eric, loving this conversation, but would like to be mindful of your time, and let's switch the gears, move on to the final round of questions. Are you ready?
Yes, sir.
All right, sounds good, man. All right, so the first one, which is the one book that you'll recommend to our listeners, which had a major impact on your life or on your business?
Yeah, so I'm reading Reid Hoffman, The Startup of You, right now. And so that's
Okay.
a little bit outside of the box of real estate. He's the founder of LinkedIn, and he's speaking all about networking and just being proactive, looking around and trying to stay ahead of things and not becoming obsolete. And so it's kind of a fresh perspective and a new take that I'm considering as I'm moving forward in business.
Right. I haven't read that, so maybe I'll just put that on my list. Let's see.
Okay.
Yeah. All right. All right. What is the one business advice that you'd like to give to our listeners?
Yeah, so I would just say stay conservative.
Mhm.
Something that I learned during this period of time with the interest rates are that the guys that got super aggressive, a lot
Yeah.
of them are paying for it now. And so I'm actually glad that I got in to the syndication arena when I did, which was back in December of 21. I was able to see the overpriced market, and
Mhm.
then how a lot of people, they overpaid and they weren't prepared for that downturn. And so that just taught me a lot, and it taught me to just stay super conservative, because I don't ever want to get into a place where I'm harming my investors because I got way too aggressive and conservative. The individuals that stay conservative, they are still able to perform. Their name is credible. Their investors
Yeah.
are safe.
Awesome. What is what's your main source of information to learn and grow?
Yeah, so as of right now, I love podcasts. And so I love taking a listen to podcasts such as Joe Fairless. I love Whitney Sewell's podcasts, and just taking in content, reading. I also love courses, and I'm a staunch advocate for underwriting. I want to get deeper and more of a solid understanding of the numbers, so that I can
Mhm.
make sure that I stay ahead of the curve, and be aware of exactly what the market is doing.
Well, that's good, right? You always have to be good at data analytics in this market. You have to study the data, pros and cons, yeah, and also calculate the risk, right? And based on your data analytics skill.
Exactly.
Yep. All right, Eric, final question. How can Decoding Cashflow listeners get in touch with you?
Yeah, so if someone wanted to connect with me, you can find me on my website. My website is moonlightcre.com. So moon, just like the planet, and lightcre.com. I'd love to hold a conversation with you and see if we could connect. And Ted, hey, thanks for having me on the show, buddy. I appreciate it. You are inspirational, just hearing from you and staying connected with you.
Awesome, man. It is a pleasure having you on the show too. It was a great show, and I'm sure our listeners had many takeaways from the show and they'll act on it.
All right,
All
I
right,
appreciate it.
thanks a lot for coming on the show.
No problem.
Thanks for listening to Decoding Cashflow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cashflow, and we'll catch you in the next episode.